Hi, today we're going to be talking about how the new Tax Reform Act is going to affect the Twin Cities real estate market. Hi, my name is Matt Barker. This is Brandon Hedges. We're with the Barker and Hedges group at RE/MAX Results. We'd like to thank you for watching our video blog. So there's lots of news out there about this new Tax Reform Act. It's 10,000 pages. Who knows how many pages here? Brandon and I have really summarized this in one page here. Let's talk about the 4 key changes that are taking place in this new Tax Reform Act, how that's going to impact the market. Brandon.
Like Matt said, there's a lot of different changes that took place, and you're going to definitely want to talk to your tax accountant on what affects you personally, but there's 4 that I think impact the real estate market the most. The first one is deduction for property taxes. In the past, if you itemized your deductions, you could deduct the full amount of your property taxes. That is now capped at $10,000 for this year and moving forward. So that's a little bit of a change. Another thing that changed was the total amount of mortgage interest deduction that you can take. It was a $1 million cap. They moved that down to $750,000 cap. There's some properties that were purchased up through the middle of December last year that would be grandfathered on that $1 million cap, but if you're in that upper bracket kind of mortgage balance, definitely something to pay attention to. Another thing that I've heard a lot of back and forth on is, was there a change to the market exclusion for capital gains when you sell a home? Early versions of the bill had some language in there that you had to live in your home for 5 of 8 years, and there was some back and forth on that. That has been left unchanged. So you do need to live in your home for 2 of the last 5 years. It needs to be homesteaded for that amount of time in order to claim up to that $500,000 married couple deduction from capital gains. Another thing that changed, you used to be able to itemize moving expenses. That has now been eliminated except for members of the armed forces. So a couple of different things that have changed that I think are worth noting there. Putting a little context to it, the median sale price in the Twin Cities is right in that $240,000, $250,000 range right now. So for vast majority of people, the property tax exclusion, to get to $10,000 in yearly property taxes, you've pretty much got to be at a $750,000 home or above. Depends on the county and the city and that kind of thing, but that's a pretty good benchmark. Same thing with that mortgage interest deduction. Average sale price or median sale price in the 200s, and we're talking about the difference between $750,000 and $1 million. Obviously, if you're in that upper bracket, there may be other implications and considerations. So I don't think this is going to have a massive impact on our real estate market locally. It may in some other areas where home values are a little bit different. For the Twin Cities market, I think it's going to be business as usual. So we really appreciate you taking the time to watch our video blog today. Make it a great one.